My trading results, execution, and confidence went from this to that the moment I realized the power of backtesting. And in this video, I'm going to be taking you guys on everything backtesting, the benefits, and how you can literally get started with backtesting as a beginner. And even to top that off, I'm going to be doing a live simulation of how you can actually backtest using your TradingView software. You don't want to miss it. Let's get right down to it. So, what is backtesting essentially, right? I know that many of us hear the term backtesting, and we sometimes classify it to be something very difficult. But I want to just say that backtesting is not even a difficult thing. It is something that just takes you probably less than an hour to get done, right? What is backtesting? Backtesting is basically the process of evaluating a trading strategy using historical price data, right? And why do we even do this? Why do we actually evaluate a trading strategy using historical price data? We do this just because we want to determine the effectiveness of the strategy before we can actually apply it to real life. Just take, for example, you've just come across a new concept and you actually want to get used to the concept, because many traders make the mistake of when they come across something new, they would want to start executing using that thing, and there's not just enough backtesting data that backs up the reliability of that strategy. So they would want to keep on, and then it can even happen that the strategy basically is not even up to par, right? I don't want to say the strategy doesn't work, but it probably is not up to par. So this is where backtesting actually comes in. And I'm going to be telling you guys the benefits of why backtesting is important, right? I cannot really type down a lot. I would have just been displaying it on the screen here. So that is just simply the meaning of backtesting. Just process of examining your strategy on past price action to determine how effective it is. Chicken. Now, what's the purpose of backtesting, right? The purpose of backtesting is what we just talked about. Is basically to assess the viability of a strategy without risking your money. Now, we said is basically to evaluate or to assess the viability of a strategy without risking your money. Let me type down. Assessing the viability of a strategy so we can actually leave it at that. Is the process of assessing the viability of your strategy before applying it in real life markets. You can actually do this without risking your money, right? Now, why is backtesting so important, right? Why is backtesting so important? I'm going to be breaking this importance into three key importance, right? The first importance is that it saves you time and money. It saves you time and money, right? Backtesting helps a trader to basically filter out ineffective strategies before trading live. As simple as that. And that's what I just talked about. It helps you filter out ineffective strategies before trading live, right? What's the number two importance? The number two importance, and one of the most important, it is the most important importance, right? It builds your confidence, right? As a trader, backtesting actually builds your confidence. I think this is supposed to be double C, right? Assess, right? Backtesting builds your confidence. So backtesting gives traders a clear picture of what to expect in real trading conditions using that strategy, and that is where you build confidence from, right? And then number three is that backtesting informs your risk management. Backtesting helps you to identify potential drawdowns that a strategy might have, and also the potential profits realization, or the potential the profit potential of a trading strategy, just so you know what to expect when you start trading in a real life market. Now, there has been a lot of debates between backtesting and forward testing, and I'm going to be breaking down the two. Now, backtesting is like I said, uses historical price data. That means you're going back to the past to backtest or to test your strategy on what has happened before in the past. While forward testing is just basically you applying your strategy in a live market to validate its results. Bam, simple as that. Now, how can you even get started backtesting? I've talked a lot. How can you actually get started backtesting as a beginner, right? The steps to backtest properly is this. The first thing you need to do is you need to actually define your strategy, right? You need to clearly outline what's your entry, your exit, and your risk management rules, right? I believe everyone as a trader by now, because like if you're watching the video on backtesting, I just assume you're already a trader, right? You should actually what first before you actually start backtesting, you need to clearly outline what your entry, your exit, and your risk management rules. I can have a risk management rules that says I cannot trade more than or below a 5 hour setup, right? A 5 risk to reward setup, right? Or I can have like an entry criteria that says okay, no inducements, no trade. It just simply means that TechRisk is saying without inducements he cannot place any trade, right? As simple as that, right? You need to clearly outline all these things. Even if you don't have strength to outline it, you can actually basically have it upstairs in your head or in your memory, right? And then number 2 is what you need to actually get the market data, right? Now you can actually use your charts. You can actually use tools that help you to replay price action, and that's what we're going to be doing here. We're going to be simulating back testing, right? That's what we're going to be doing here. So, right, for those of you who do not know, this is where the TradingView backtesting tool is here. Is right on top of there, right? That's where it is. That's where the tool is, right? So we're going to be using the replay tool to actually simulate a real backtesting scenario. Now that is the second step. The third step is to now simulate your trading, right? And this just simply means you going back in time and using a price replay tool, just like we have on TradingView, following your rules and tracking what happens trade by trade, right? Now the fourth step is writing down your results. You need to keep track of your wins, you need to keep track of your losses, you need to keep track of your profits and how far price has also moved against you, right? Your overall loss or profit expectancy, right? And then the fifth and the final one is to review and improve, right? Look for patterns in your trade. What are those patterns that you saw that okay, yes, gave you a profitable setup? What are those patterns that gave you a losing setup? And just identifying some of these loopholes. What worked, what didn't work, then you adjust and you test again. And just simply by doing this, you're already on your way towards mastering your strategy. Now, for the sake of time, and I don't want this to be very cumbersome, we're going to get down straight to the TradingView instruction on how you can actually backtest, right? Now, the first things first, you need to, like I said, get market data. Now, you can actually start backtesting from any you can backtest from any time frame. If you're a swing trader, you can use your 4-hour time frame, 5-hour, 6-hour. Primarily, I'm a day trader. I use my 30 minutes M45 and H1 to do my backtesting, because these are the primary time frames I execute my trades from, right? So and then you also need to pick a certain time or a certain day or whatever you want to backtest. So let's say, for example, I want to backtest GBP USD. I want to backtest last month's price data. I need to come to 1 month. I need to set my TradingView candles to be 1 month, right? To be 1 month. See how the 1 month data looks, right? See how the 1 month data looks, right? Let me take this off. See how the 1 month data looks. So I can actually say, okay, you know that in a time frame, every single candle represents 1 month. Every single candle represents 1 month, right? So some persons even backtest as far as backtesting a full year of price action. By that I mean, look below here. In this line, you're going to see below here, it is written Wednesday, May 1st, 2024. So you can see that each month you go back, you're going backwards to a new or a previous month. So let's look for January. Okay, this is January. So this is when GBP USD price action started for 2024. January 01 on a Monday. So you can actually take your price replay tool, go to price replay, and then you cut it from January, right? and then when you cut it, you got it from January, and then the price action from January till current date is going to what completely be what removed or obliterated, and then you're going to be left with what's past price action, and then you're going to start what evaluating, just like I said, simulating what your trading strategy as what the candles are formed in real time. But because I don't want to waste anybody's time, in fact, you can't even backtest on the monthly time frame because we'll still need to go down to like the 1 hour time frame, right? So because I don't want this video to be too lengthy, I don't want it to be too bogus, I am going to actually just backtest a very small data size and just show you guys how I actually do it based on what I see on the market and how I react to what the market is showing me, right? So let's just cancel this. Let's cancel that, and yes, and just backtest a very small price action size. So let's say I want to backtest from, okay, I took this trade. Let's say I want to backtest from, let me just say here, so November 1st. Let's say I want to backtest from November 1st. I want to backtest November 1st price action. So let's just do it so we can get a sense of like, what to expect. All right, so the thing now is that you've actually cleared what future price action, so you're back at the past, or you're back in time. So what we actually need to do is you need to actually come to the bar replay. Where's the bar replay to now? Make sure it's not behind. Okay, you need to come to the bar replay. You can see the bar here, you can see the speed, you can see pause and play and all of that, right? So you can decrease the speed to match the level at which you want the candles to go, right? I typically use 1 or 3x just because I want it to be a bit quick, right? So once you play it, you're going to see the candles were forming in real time. Okay, 1 seems too fast. All right, so we can actually see this move. This is a gap that has been left because, okay, the market's open. This is 12 o'clock. You can see 12 o'clock 00, November 4th, 12 o'clock. So this is a gap that needs to be filled, right? So it also serves as a POI. You can see it's an even a fair value gap, right? So it also serves as a POI. So I'm expecting price to come into this place and possibly react up to this level, right? So let's see what happens. And let's see what happens. Okay, let me reduce the speed because it's like it's going too fast. So and you need to be in a place where there is very strong network, right, for it to work. What was that? You need to be in a place where there's very strong network. Forget that big speed. It's my screen that called it up. You need to be in a place where there's very strong network, right? Okay, you can see that rejection. You can see that rejection in price. Let's see what happens. Okay, I think 0.5 is actually very slow. Let's take it up to 1x. Okay. So 1x, now we have the candles moving. So you just keep watching what the market is doing. You're going to take a few losses, you're going to take wins. At the end of it, the goal is just to evaluate what you know, how effective is it, right? What you know, how effective is what it's. So I'm just going to keep going. Just going to keep the markets going. I have very strong network today. So, all right. So we have a fair value gap here. So this fair value gap here, we have like our breaker block that aligns with the fair value gap, right? And then we have like a form of liquidity here. So let's just keep playing price action and see what happens. So that will serve as a POI where we can actually sell the markets a bit. So should I take it up to 3x? Because like 1x is like it's taking painstakingly a lot of time. So let's take it to 3x. Well, I'll not be able to catch a lot of trades that I want to show you guys, but the essence is just to show you guys what it is and how we can actually get it done, right? What it is and how you can get it done. So I've taken it to 3x. So let's play price action and see what happens. Okay, so we have that. Okay, boom. All right, so I love what I'm seeing here because like it's something I teach a lot. In fact, if you watch my video on like how I made $16,000 trading just XAU, you're going to see this pattern, and it's something like this. It's an inverse what head and shoulder pattern, right? An inverse head and shoulder pattern. An inverse head and shoulder pattern where I want to expect price to come into any form of POI and then just go up a bit, right? So it's just happened here. You can see the shoulder, the head, the other shoulder. So I'll be expecting price to come into this level. Expecting price to come into what? This level, right? Or yeah, let me take it up to this level just so we don't miss the entry. So let's see what price does. I think I took this trade. I posted it on my Twitter. I took this trade. So boom, we have price react from the buy, price bought, and then price is delivering what's the sell right now. So let's see how that one goes. So very beautiful price action here. GBP US is like one of the pairs that if you're a beginner you would love, because like there's just like very, very beautiful price action here. So we just want to keep the candles going very quick because like I don't want this video to take up to all right. So okay, I can see something like this. Now this is, we know that when price breaks structure, we have what's a continuation to the downside. So I can see this is an efficient price action. For those persons who have watched my video on efficient price action, this is an efficient price action. So you can see that market broke this level and came into it, and then boom. So I'll be expecting that the price or the market comes into any level here. So I want to show you guys how I probably just mark out my POI if it appears for me. So I'm going to be looking for a tweezer type candle, right? A tweezer type candle. So my entry is going to be anywhere around here. It's going to be anywhere around here. Anywhere around here, right? Anywhere around here. That's where my entry is going to be. So let's play price action and see what happens. Like I said, you're not going to experience it this smoothly if you don't actually have a good internet in where you stay. Okay, so that delivered very beautifully. We also now have a new efficient price action, although not yet. So if price crosses this level, as the price crosses this low, if price breaks this low, we would have a new efficient level. Then we can actually look for trades up here, although I can see a very clean order block here. So but let's just see. Okay, so we have some sort of a pullback here. Some sort of a pullback into this FVG, kind of like an incomplete pullback. Okay, now we have our break. Okay, so having this break and this incomplete pullback here, this is MSU. You have this a fake break or structure. It's a fake break or structure, which would now provide us towards this level as an inducement, right? Now this level is what's inducing price to actually get. So for those who actually want to know the indicator I use for my FVG, it is FVG nephew Sam, my nephew Sam indicator, FVG indicator, right? So we're inducing that particular level, right? So I would have been using put your position tool and all that, but I don't want everywhere to get messy. I would have just been using the position tool. But let's see if I can use one here. So we have a very neat price action here that I'll probably want to trade. I'm just looking for a low that my target. Okay, a low is in, and I can actually take this low as my targets, right? Probably give me something like a 3-hour or a 4-hour. Yeah, but I mostly trade minimum of 4 to 5 hour. Yeah, but although it's not like if the market gives me 3 hour, I will not collect. No, the market gives me 3 hour, I'll collect. Okay, stop loss is slightly above the block, and let's just see how this one goes. I think I even need to speed up this a bit. It's now taking a lot of time. Okay, 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 okay. 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 There was even a buy that happened inside here, right? There was a buy that happened inside here. I'm going to do a video very soon on what shift of market structure. So you need to actually subscribe if you're not subscribed. There was a buy that happened inside there, right? You can see the failed swing, the failed to swing, and then we had this what's price coming into this block to buy, just so we could actually have the sell delivered, right? Okay, will this actually deliver to the end? Okay, beautiful. We have like 4 RR in. So you're just going to be simulating price action and seeing what the market does with what eats every move. Oh, boom. You can see that, you can see the gap that was left behind by this gap actually formed an FVG, and so we expect the market corrects it, right? That's one thing about trading gaps, right? We expect that market corrects each gap that is left by it. So you can see how market's corrected. Now we're expecting price to push up, right? Okay, so we have our first, this level is in, we have the first break, we have another break, we have another break, right? And so we would have this low to be, let's be careful with this one so we can be able to like educate some people and can be able to see something. So we should have a trade, a buy trade. Okay, beautiful. So obviously we'll have like what, we should have a buy. This is our what, incomplete pullback, which is our inducement. We should have a buy around this level, should be our block. So let's see. Okay, so the thing about like when price triggers like a key level like this is that you expect what, a new block to be formed, and this is a valid order block. This is a valid order block. This is where I will be what's interested in buying the trade if I want to like add more positions, right? I'll be interested in buying the trade from there. So let's just see what happens. It's just okay. We have another form of like incomplete pullback. So we should also be expecting price towards, some persons might get in here, although this is just going to be some form of inducement or what, engineered liquidity, and this engineered liquidity is going to be towards, I'm going to be buying this trade from here, right? I'm going to be buying this trade from here. Probably I can just target here. Don't want to do so much, just specific target levels with our stop losses slightly below what's the block. There's a 3-hour setups, and let's see how it goes. Some persons may even target to as high as here, right? Some persons may even target to as high as there, because like that's the last range if price gets to that level though. Okay, so we have these very beautiful movements. Very beautiful movements. Can we actually have up price action? Why is this thing stopping me? Okay, so we actually have a very good buy that is settling in very nicely. And yeah, let's go to the 3x. Let's speed it up a bit so we can actually see something very beautiful that I talk about a lot, right? See something beautiful. Okay. Okay. Okay, so nothing major. Nothing major that me myself I would want to do. Okay, we have the same thing that happened here, we have it here again, right? We have it here again. We have our first break, which is also an efficient price action area. We have the second break, and then we have this what sell rejection candle that is rejecting sales, and we have our entry to be what on this tweezer like order block, right? This tweezer like order block, yeah, this tweezer like order block. You can see how very clean that one went. Okay, so literally that's how you backtest, and as you're doing all of this, you're basically taking note of like what is happening, right? Taking note of like what is happening. Okay, this is also a very, very good scenario, right? Of we can see the first break, which is going to serve as our change of structure. Can see the first break, which is this level, right? Some places call it COCH, right? And this is the second break. So I'm expecting that price comes into this other block here, this very beautiful other block here, right? Price will come into this other block here. I basically want to take the tweezer, that's the equal top there, right? So I'm expecting price to come. I think I took this trade. This is the trade I took on GBP USD that acted very stupid before it played out, right? Took this trade. Should be like a 7-hour setup, and let's just see how the market reacts. So let's play that fast. Okay, we even had our entry like what before that. Oh, very, very, very beautiful setup, right? Very beautiful setup that actually delivered very cleanly, right? We are coming to the end of the price action already. You can see it's taking a lot of time, and the truth is that to backtest, you need to have a lot of patience, right? I'm seeing a lot of moves I would have been able to catch though, based on how I trade, right? I'm seeing a lot of moves I will be able to catch based on how I trade, but then just for the sake of this video, I don't want to rush it. There's just one price action I'm looking for. Okay, I've gotten that, right? Okay, boom. Our expansion left behind an FVG, right? What's the first thing you need to do? You need to actually mark out the consequent encroachment, which is the 50% mark, and that's where we're going to be typically expecting price to come into, right? Before we have like before we can declare like, okay, yes, that particular FVG has been filled. So we can actually see this sort of price action. This is a block I'll be looking to consider, right? It's a block I'll be looking to consider towards, because this block actually fell into what we call a road block, right? It fell into what we call a road block. Now, a road block is like where has rejected or held price, for a while. So we can see the road block there. You can see it here. You can see it here. So that's typically the place I'm going to be expecting price towards react from, right? Before we have the final sell. So we can also have that our low is in. So this was the GBP USD trade I also took. We can target this low. Right, and let's see how this one plays out. I think that should be the end of our backtesting session, and then okay, boom, very, 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 very clean. Rocket science. That is rocket science. Very, 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 very clean. And the thing is that when price actually moves like this, it also still gives you opportunity to see enter trades again, because like, okay, this has happened now. Let's say you were not online and you were not able to like see this particular move, right? You were not able to see this particular move. Now you can actually can see that price actually reacted from that block, right? And when price does that, like I said, it always leaves behind a valid order block, and you can see a valid order block here. So we can also see have like a sell from here. And I think this was a sell that actually delivered today. Can target this low primarily. I can actually have a sell from there. Alright, so it's a 3-hour setup. Let's see how it goes. So literally, that's how you actually backtest and anticipate your setup to play out. Now, what are the key metrics you need to actually pay attention to when you're backtesting? What are the key metrics you need to pay attention to when you're backtesting? The first key metrics you need to pay attention to, I think I need to be writing it down so that you can possibly copy it into a note or something. The first key metric you need to actually pay attention to is what? Your win rates. Right? Your win rates. Now, what's the next key metric? Now, this win rate now basically just means what? How often do you win trades? How often does these your trades? How often is it won? Right? The next metric you need to also pay attention to is what? Profits. Your profit versus loss, which is also your win rate, right? Your profit versus loss, right? On average, are your wins bigger than your loss? Right? Because like, you can have some persons who are actually catching trades, but then they're actually still not profitable, or they're actually still not making money. Why? Because they actually catch trades, but their wins are still greater than their losses, right? Now, that is the second key metric. The third key metric is what? Drawdowns. Third key metric is what? Drawdowns, right? What is the worst case scenario for losing your entire money? What is the worst case scenario to lose your entire money, right? And then the final one, the fourth one is what? Right? What is your profit factor? Everything just falls under what? Win rates. If you're able to like decipher what your win rate is, you're not going to have issues at all. Now, this profit factor is basically what? Are you making more money than you're losing? Right? As simple as that. Alright, so how can you actually avoid common pitfalls in your backtesting process, and what are the common mistakes that people actually make? Now, the common mistakes in backtesting that people make is this. I'm going to be breaking it down into 4 major mistakes, right? And now the first one is what's curve fitting, right? You may be hearing that word for the first time, or you may have come across the word some other place. But basically, what curve fitting is just like, let's say you're trying to over optimize your strategy, right? So that it performs well when you're backtesting, but then you don't do the same when it is time for real market trading, right? So over optimizing a strategy to perform well in historical data, but failing to do the same in live markets will limit your backtesting results, performance, and it will also limit the essence of the backtesting itself, right? So the second one is small data sets, right? And when you test your strategy on a very limited data set, it doesn't account for the diverse market conditions. So your data set must be very, very broad. You must test out various pairs. You must go back, to very, 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 very ancient price action, and that's So the third one is ignoring costs, right? Sometimes this one can actually be very difficult if you're not really doing so much intensive backtesting, right? So something like you're failing to account for transaction costs like spreads, like commissions, like slippages. This can also limit your expected results as well. And the last and the fourth one is bias. When you allow hindsight bias to influence your trade decisions in backtesting, right? So what are the next steps, right? Now, after backtesting, after testing your strategy on a simulated demo environment, the next thing to do is to forward test, right? That's how I always recommend it. Backtest before forward testing. Now, you need to actually now monitor how your strategy performs in real time, using real life market conditions, and by that way you're also validating its effectiveness. Now, backtesting is a very continuous process, I must tell you, right? The market is evolving every single day. That is why we urge traders to make sure they backtest, because something that might have been working today may have changed a bit, but someone who is actually regularly backtesting, seeing how the market actually evolves, and how the kinematics of the market actually is growing, is not going to find trading difficult, right? So obviously the market evolves, so your trading strategy must also evolve with the market, right? Regular backtesting helps you to adapt to these strategies and changing market conditions. This is a critical step in your trading journey, right? Backtesting is a very critical step in your trading journey. When you properly backtest, you properly analyze and refine your strategy, you can trade with so much confidence in the market. You can trade it with so much confidence in the market. It also helps you mitigate risk right? And also it helps to improve your overall performance, right? You need patience and discipline in this process because these are the key things that will actually keep you what's grounded doing what you're backtesting. Patience and discipline. And I'm wishing everyone a good luck. If you've never backtested before, this is actually your sign to lock in and start backtesting. Wishing you all good luck and a Merry Christmas, and I'll see you guys in the next video. Take care.